Hello, today is February 19th, 2023, a Sunday, right around 8 in the morning. You're going to do a quick report. Today's session is titled, Can the Market Technicals Refirm? And this is your weekend report. Hi, this is Jonathan Gurney, Portfolio Manager at Gurney Financial. This post is for informational use only. The views expressed are those of the author Jonathan M. Gurney, that is me. This material is not intended to be relied upon as a forecast, research, or investment advice, and is not a recommendation, offer, or solicitation to buy or sell any securities or to adopt any investment strategy. This is just to keep clients aware of what's going on, the moves I made, and what I'm seeing. Let's hit the charts. Okay, so we're going to actually try to keep to the 5-minute drill and actually follow that. So here's the deal. We had a quick run up in January, almost straight up, very nice move. We missed it. You have to wait for consolidation, and that's kind of what we've been doing the last couple weeks. So on the way down, I've been slowly adding. It's what I need to do just to see if these levels can hold. So the key levels that I'm watching, as stated right in the top right, we want to get right above 41.17 again and hold 40.65 and 40.51. The areas I added are, I added at 41.30, 41.03, and 40.67. We are currently at 40.80 approximately. So we're still getting 2 to 3% moves. It's very volatile. In 2023, things have shifted a little bit, where instead of the 2 to 3% moves averaging down, we're actually averaging up. You can see this is called a bull flag, tight consolidation after a straight move up. So the straight move up is right here, and now we're consolidating. And this is where I want to see if we can hold key levels. We are still above the 21-day moving average, which is this. We're actually right at it. We're slightly below the 21-day moving average, but we're still within this bull flag, and I think this could hold. If it doesn't, I'll get out. But it's been a nice run in January. If you miss it, you can't chase it. But on the way down, I'm adding, which is why we had a slightly down week this week. It's tough. I mean, on this Tuesday, this was the most frustrating part about Tuesday. I added, as you can see here, on Monday at 41.31. It gapped down that morning. On Tuesday morning, I added at 41.06. I wanted to target 41.65. It went to 41.63, tanked in 2 minutes. Like, I was on the sell button, and in 1 minute, we basically went from 41.65, and I'll show this to you. 41.65 to below, or right at 4100. So I was up 1%, and in 2 minutes after that, it was negative. And this is just trading the index. That's how volatile things are right now. So here is Tuesday. Where is that? What date was that? Let me check real quick. So that would have been the 14th. So the 14th, we spiked up, spiked down, and here's your quick tank. Boom. It was not a fun situation to know that you were positive for the week and it was taken away right at your target and you couldn't get out fast enough. So that was heartbreaking a little bit, but we are still holding key levels. We're right within this bull flag. Here's the FOMC breakout right here. We did manage to stay above that, which is encouraging. Let's take a look at some individual stocks to see. These are the major holders of the S&P 500 right here. Okay, so the 10 biggest positions currently in S&P 500, how did they do this week? Definitely mixed. More of a conservative base. Some areas that I'm watching. First of all, the McClennan Summation Index is rolling over a little bit, but it doesn't necessarily mean it's time that we're going to die. Like, for example, this rolled over, McClennan Index died but the S&P 500 rallied significantly for months. So you got to be careful of these false signals. And so things are on thin ice from a technical standpoint, but we are holding key levels. And until we really break 40-50, as it states in the top right, it's hard to be too bearish. And so we're in a situation here where technicals are kind of holding us up. Fundamentals are truthfully not great, but the market tends to work through these situations and shocks the world. I understand tax statements, it's emotional. You look at it and it's like, man, we had a terrible year last year, and it's heartbreaking for me too. But at the same time, we know when we have performance like that, it usually leads to a decade of performance. So we'll see. Short term, I don't expect a ton of more downside. But if we do lose the 40-50, 40-20 could happen very quickly. So a reduced exposure. But we are in a situation, like, let's take a larger span picture of this. We are above a rising 50-day moving average. That's bullish. Okay. The 50-day moving average is this blue line. That's bullish. So I got to start adding, because these are good signals. When the 50-day crosses the 200-day, that's a good thing. And it did, and look what happened. It rallied hard. Now we got a little bit overbought, and now we're testing key levels, and we're at key levels that I think could be very, very interesting. So if we lose 40-50, I'm probably going to initiate a 25% hold at all times, because I do think that we get through this, and even if we do go to 3,700, it's going to be so volatile that I don't want to miss a quick move up. There's just a lot of things under the table that could really push us higher and lower objectively. I think you got to be really careful with some things that I'm seeing, but at the same time, I think at any time, the risk reward to have 25% on makes sense. So that's what I'm going to initiate, so I don't keep missing moves. I mean, we're getting a lot of moves overnight, and it either makes or breaks you, but you got to have some on. And that's where I've made some mistakes in the past. So good news is that we're much closer to bringing on a new advisor, top 1% performance over the last 3 to 10 years. And that's really going to help me as I'm growing. And I have so many hats to wear at this point. It just will help. I mean, 17 hours a day on a computer can make you lose your mind a little bit. So a little help is going to go a long way here. Kind of a chart that I want to show you was the healthcare sector, XLV. This is by no means saying I'm going to buy it, but it's interesting how this is, it's not necessarily, a strength play, but it's showing that it's consolidating, and we did test the 200-day moving average and it bounced. So it's something to watch is basically what I'm saying. So I really want to watch this. I want to see SMH, which is semiconductors, continue to do well. We did hold the 21-day moving average. So after a huge run, we tested the 21-day moving average and we are slightly above, which is good. So usually you want to see semiconductors do well for the market to do well. So we want to see that continue to do well. XBI, which is biotech, big move down, held the 50-day moving average after some consolidation and trying to push its way up. It did test, got above the 5-day moving average, magnet to the 10-day and 21-day or 20-day. So some areas, there's some mixed signals at this point. Like, this is good to see. Semis had a tough week this week, but not too bad. It's consolidating well overall. So the market could objectively go either way here, but I want to continue to add on the way down because I do think we do get through this. I think the majority are bearish at this point, and I think we got to be careful being too negative. And I can tell you, based on the client interactions that I have, people think we need to take cover and hide take cover and hide, basically. And so I know it's easy to think that way, but usually the market gets through these situations. Even though I'll be honest with you, it seems like it's not possible, but that's the way it always feels. I mean, it felt like that in 2020 when COVID happened, and that ended up being a fantastic year. So a little different situation with where we are with rates and inflation and so on. Don't get me wrong, but right now technicals are holding us up, and if they continue to do that, they can press you much higher than you could ever imagine. So got to remain optimistic. Thanks, guys. Have a great weekend. Enjoy your Monday off. If you got it, see ya.